Well, good day all. Ira Epstein of Linn and Associates with your metals market update for this Monday, the 22nd of April, 2019. We're about 3:20 p.m. Central Daylight Time. Settlement prices aren't in the metals yet, but they'll be in this general range. These are the settlement prices already in the stock indices. Now, the event of the day, of course, had to do with energies, where the Trump administration surprised a number of countries by canceling all waivers, that's according to them, all waivers on oil shipments after May 2nd from Iran to them. How the sanctions will be applied, what they do, the market's yet to know, but we're hearing the first step. Of course, Iran will argue against it. They're talking to the people that were buying the oil. We'll see how that plays out. But as you can see, Brent oil gained on WTI, as what's being impacted, of course, is the Brent crude and, of course, markets outside of the U.S., especially anyone that is buying from Iran. Now, as we take a look at the metals, it tried a larger bump today because the first thing Iran was threatening, of course, was closing the Straits of Hormuz. A lot of oil goes through there because we're attacking their independence by shutting off oil purchases or doing our best to take it down to zero, as Mike Pence, our Secretary of State, said. The dollar index down a little bit. There's a number of foreign currencies behind me, as you can see, trying to hold up against the dollar, even with interest rates climbing a bit right now. Now, this is a big earnings week, so you got to keep your eye on that too. When we come to a weekly chart, it just closes on the gold. Past tense, the market made a high of 1329.20. Now we're down into the 1271.90 range. So the market has fallen hard, about $50 an ounce, right? So that's been a break. And notice the market is staying under the 18-week moving average. And when you're over that average, I define bias as being up. When under it, bias as being down. When a market gets too far away from the average, I look for it to at first come back and try to figure out what it's going to do against that number. In this case, it spent very little time there, and then it started resuming this decline. When we take a look at a daily bar chart of the June gold contract, each bar represents a day of trading. I created an indicator called a swing line, and the beauty of the swing line is it lets me easily identify, is the market trending, which way is it trending, what's the risk associated with that chart pattern, not the risk in the market, the chart pattern. I define a downtrend as having lower highs, lower lows, an uptrend, higher lows, higher highs, and that's higher lows and higher highs, and no trend is having in some manner a higher high and a lower low, nothing in sequence. This market's sequencing. You've got lower highs, lower lows. Therefore, the definition is a downtrend. The swing line indicator looks at 5 different ways to draw its line: inside days, outside days, higher high, lower low, outside day up, outside day down. So those are really the ways. Until and unless the market takes out 1299.10 based on the current formation, the market's in the downtrend, and that would be the number you'd have to take out to negate the pattern of lower highs, lower lows. Resistance comes into the market when I apply moving averages. That's what I'm always looking at, is for support and resistance first. The 100-day and the 18-day is defined as the red and the green. We're under the 18, so I define bias as down. Should you rally up, wherever that number comes in would be the first resistance I see in the market. What about potential support in the market? One of the tools, and I use a couple, is a Bollinger Band. Now, the theory of Bollinger Bands, these black lines, is the market will trade within them 95% of the time. That is how the theory is set up. I came up with the idea that the first time that the band is hit, be it to the downside or upside, I don't care which one, that's where I think pros are taking money off the table. I then look at momentum to see, is it building in, is it oversold, overbought? As George Linn taught slow stochastics, normally the market would get overbought, oversold, and you're looking for momentum to lead price. That's one of the ways that he taught it. I came up with the idea that why can't momentum lock into a direction? And I'm talking lock into an oversold or an overbought and create a new trend out of that. It takes several days for both numbers to be under 20 or over 80 to do that. Right now we have both numbers under 20, both under 20 on Thursday, and both were under 20 on what? Wednesday. Therefore, I'm there. Until the red line closes back over 20, I say that the market will find willing sellers from the pros. If it gets over 20, on a closing basis, I look for price and the 18-day average to come together. It's just a momentum idea. Does it have to happen all the time? No. Nothing has to happen on a chart all the time. When we take a look at the popular ETF GLD, we see lower highs, lower lows. Now, the market at first broke through the 18-day average right here, didn't even come back to challenge it. If it doesn't come back, I start looking in layers. The 100-day average Bollinger Band goes to the 100-day average, found its first layer of support. It is getting oversold. The market drops down into the lower Bollinger Band. I will stay with what I said before. The first time you challenge it, often. The word is never always. I'm looking for the pros to do what? To cover some shorts. Market's getting its bounce, and that's all you can say right now. It is not yet embedded. In GDX, the market has just all of a sudden come unglued. But we saw that happening right here. Notice the pattern, lower highs, lower lows confirmed. The market was not yet oversold. I'd be looking for first support just the way I'm saying it, whether it works or not. For the pros to be a buyer against that 2177 level. Now it's 2166. Now it's 2153, where the market hit 2149 on Wednesday. It kept going under it, and it's still going under it. So you've got 2 days in a row under the lower Bollinger Band. The odds of staying under a Bollinger Band are 5% of the time. Because it's under it doesn't mean you're a buyer. It just means that I think there might be a better opportunity to be seller if you want to be a seller over it. Buying when you're in a downtrend under the 18-day average, not something I teach. Now the question is, does the market get to an embedded level? It's not here. It wasn't that way either on Thursday. So I have a market that's stretched out, oversold, where the odds favor a bounce of some type is likely. In the gold-silver ratio, you can see how the ratio has moved from 86.99 back to 85.31. More important to me is when it broke through this low right through here, the market gave up the opportunity to say it's back in a bull move. Now, this implies, that's all it does, is it implies that silver is stronger than gold because you take the amount of silver ounces you would need to buy 1 ounce of gold. That's the idea behind the ratio. And as you can see in silver, if this market were to get over 1350, you negate the downtrend. The market was also one of these markets that's in oversold territory. The first time it hit the Bollinger Band, you came back one time back under it, you bounced away from it, and now the question is, do you break under this low of 1497.50 to make a run again, or do you get over this 1350 to try to make a run at the 18-day average or potentially higher? In the copper market, I'm going to stick with what I've been saying. I think the first time you hit Bollinger Bands, pros come out of the market. You hit the band, and I realize that is the time when everybody's probably mentally getting the most bullish, probably some good news out of China. That's what's been the theory of this recently. All of a sudden it falls back to what I call that line in the sand, and it's sort of hanging around there right now. Is it trending? No. You got a higher high, lower low. Platinum market went up today, got as high as 918.30, took out the previous low. Now the difference here, coming into today, you had the lower highs, lower lows. Where did you settle? You haven't settled under the 18-day average. So the swing line's down, but the bias is up. The two fight each other. You go up even higher today, and by the end of the day, it gave up those gains. That's all that it did. Is it trending? No. You have the higher high, lower low. Palladium, remember what I said about the first challenge of a Bollinger Band. I'm looking for the pros to come out. Well, you didn't quite hit it. You got as high as 1417.20, 1418.70 is the Bollinger top. It's close enough. You fell back to the 18-day average. But more important, we had talked about if you took out 1373, you break the pattern of lower highs, lower lows. The support came in against the 100-day average. You rallied back to the 18. The market starts moving up last Thursday, spikes today, and then gives up the game. Last, talking about my research, and that's where I want you to be. You hear me talk a lot here about my theories. That's all they are. I'm not telling you to buy or sell anywhere in this. Where I do that is in my research. Here, I'm talking about how I think these indicators that I'm showing apply to the market. It's not a trade recommendation, it's ideas on teaching. In the morning, I go through charts that actually have 45 charts, and I put out buy and sell recommendations that you're listening to. I also, twice a day, write my reports, give you an update as to what's moving markets according to different market reports that came out that day, what the next day's reports will look like, things of that nature. Then I'll do written and oral commentary. Some people want a phone call, and I'll do those during the day where they can hear the update as it comes in. If you haven't tried my research, simply give us a call. You can also go to our website at www.iraepstein.com. You'll see our carousel of free offers. Sign up for any of them. We'll get them right to you. You can always click up here. It'll take you to our page on our website if you're watching me on YouTube. I'm Ira Epstein. Have a good day.